Good night, everybody. Today is the 19th of July 2017. Tonight's webinar is entitled Simple Trading Strategies. Now, I feel like there's a lot of ideas floating around, a lot of different strategies floating around, and I just wanted to show some simple ones tonight. Doesn't have to be the holy grail strategies or anything, and I will also include my strategy at the end of this one, but it's just some simple strategies that can get you a trade during the day. First of all, um, let's do. First of all, if you're looking at the chart right now, these are naked charts, being that there are no indicators on. We have no volume, no moving averages, no trend lines, no RSIs, MACDs, stochastics, whatever indicators that you use, no VWAP, no nothing. Okay, so naked charts basically giving us the idea of what the candlesticks alone look like without being jaded by anything, without being biased in any way based on the charts, oversold, overbought conditions, those sorts of things. Okay, so the first strategy that I'm going to show you is I'm going to go over four strategies, four simple types of strategies. Now, there are many different types that I can go over, but I figured this four strategies can help you during the day as a day trader. This is basically for day trading. These four simple strategies can help you as a day trader to try to make something happen during the day. The first strategy that I'm going to go over is ORB, and that is ORB. I'm sure everybody is familiar with that, and if you're not familiar with that, it stands for Opening Range Breakout. So I use the 5-minute time frame as my day trading time frame. Now I do switch that up into a 15-minute time frame based on the types of charts that I'm using, and if I'm looking for the continuation on a trade that I'm in, I'll switch it over to a 15-minute time frame, so that way I'm not really concerned too much with the noise or the slight movements on the charts during the day, as I'm looking for a bigger trade. So only when I get into a chart that's really working for me that I'll switch it over to the 15-minute time frame. That way I don't get taken out of the trade unnecessarily based on small pullbacks or what have you. So opening range breakout, I use 5-minute time frames. Okay, so basically when a chart prints its first 5-minute candle, that's all I'm looking to really get out of the trade. So we're looking at, this is the first 5-minute candle here. I'm looking at the top of the candle and the bottom of the candle. So what I do on my side charts, if I have a chart that I'm looking to play especially, I'll line out where the first top wick is and the bottom wick of the first 5-minute candle. So now I'll use that 5-minute opening range breakout to formulate a trade around it. If the chart breaks over the 5-minute ORB, opening range breakout, to the upside, it's usually a long setup, and if the chart breaks the 5-minute to the downside, it's usually a short setup. On this trade, for example, with crude being up and with crude looking bullish, I'm looking bullish on a chart like this, so I'm looking for the chart to break to the upside. In between the 5-minute time frame, from in between this range here, I'm not looking for a trade. I don't have an alert set or anything. So as the chart works in between this area, and I've distinguished where the top and bottom of that 5-minute candle is, I'll set an alert for the chart, especially in between this range here as it's sitting around. I can't look at this chart all day long. So what I'll do is when I see the chart sitting in between here, I know that I want to play it on the long side. If I'm looking at crude, I can see that a lot of crude charts are moving to the upside. Knowing that this chart, not crude, CLF, not crude, steel. So I'm looking at this chart all together during the day, and I'm looking for a 5-minute opening range breakout to the upside. So I'll set an alert for the top side of this, and when the chart breaks over that top side, I'll be alerted. So first alert came off over here, candle never came over and closed over the 5-minute opening range breakout, so I didn't take the trade. Now the alert goes off as many times as I want, so I reset it again because the chart tried to push through to the upside and failed. So the chart does this all day long, and it came and pushes through again, so alert was set up. So the alert set here, candle closed above, pulled back in, and so I'm just looking at the chart at this point for a possible trade. When I like to take an opening range breakout trade, I'm only on a 5-minute time frame. So when I like to take an opening range breakout trade, I tend to like to make sure that the candles are completely over that range. So even if it's a big candle, I'll understand that it's a big candle. I'll wait for a pullback or something closer to that opening range breakout before I take the trade. But I tend to like a candle that is completely out of this chop zone. So this little zone here for me would be considered chop because it's not fully established as a bullish formation. But this candlestick here would give me the reason to take the trade on the long side. So an opening range breakout trade, CLF would be a prime example of that. And you can see that the chart obviously had a decent move to the upside. Now it doesn't matter how much of a move this is price wise. The point is that the opening range breakout on CLF would have given you an upside move. Hold on. CLF opening range to the upside. So you can use this opening range strategy for the downside also for a short trade. But I'm going to go over a couple examples of opening range, and CLF would be one of them. Let's take a look at X. X would be a nice example of an opening range breakout to the upside. If you did the top of the first candle and the bottom of the same candle, you'll get that breakout to the upside. And then opening range candle breakout. This candlestick over here would be an opening range trigger, and that would be enough to take the chart for the long trade. Next chart, QCOM. Let's do QCOM. Opening range, 5-minute opening range candle breakout from here to here would give you either a long or short position. So your chart stays in here, and when it breaks over and forms a candle over, then you take it on the long. So this chart's from 56.50, and obviously it pushed up to 56.90. Is that a huge move? No, but it's a good example of an opening range breakout. There are charts that will give you really nice trades from the opening range. And this one really didn't have a 5-minute, so I just kind of used this area here if this was a chart that I was monitoring for a trade. And the opening range on this one would have given you a really nice move to the upside. And so on a chart like TDG, you've seen that some of the other charts didn't have a lot of range, but this one had a good 5 points to the upside. And that's a simple opening range breakout trade. TWLO. Opening range on this one, first 5-minute candle, top and bottom. Opening range to the upside. Even if I didn't take it here, if I took it in this range, then you'd still get a pretty nice almost 1-point move on TWLO to the upside. And then AKCA is a good example, as the chart really didn't have much of an opening range candle. I just kind of use a zone on this one. And you would need a zone sometimes on some charts. Sometimes the 5-minute candle just isn't enough information for you to make a trade, so you can use a consecutive amount of candles if you feel like that opening range is too tight to play with, if it doesn't have a defined risk. You see, if an opening range has a candlestick like this, right, at the bottom here, now this isn't really much of a range here to use. That's actually just a spread. It isn't fair for you to be using that as your opening range. So what you could do is just use a little range of where the chart's at, and obviously you can see that the break on that range over here to the upside would have given you a pretty nice move on AKCA. There are obviously the same types of opening range that you can use for a breakdown strategy, a short trade. We look at PBYI. Defined opening range candle from the top to the bottom, and as soon as the candle broke to the underneath, you got the idea that you want to be short on the trade. Candle opens underneath that opening range, and then you take it on the short for the downside move. Another example of a short Momo, MOMO, same thing, 5-minute opening range candle, top and bottom wick. We had the candle never broke through the top, so you never took it on the long side, but it did poke through to the bottom. So on this chart, maybe you didn't wait for the candle to close completely, or maybe you did, waited for the chart to come back up. Maybe you got the trade, maybe you just took it on the second one, but this was an aggressive candle to the downside. So sometimes when there's an aggressive candle like this to the downside, I try to wait for the pop. So in my situation, I may not have gotten short on this, because even if I was looking at the opening range breakdown, I would have been a little bit hesitant to take it down here. I'd have been trying to get the chart to push back up here. But you can see how the 5-minute opening range on this one would have given you a short opportunity. Now all you have to wait for is 5 minutes. 5 minutes of no trading, 5 minutes of just paying attention to the charts themselves, finding the charts that are in zone and the charts that are plain, and then you're able to strategize a trade into the day. 5-minute opening range also can be used as resistance or support areas on the same charts. So you can see in this case that the chart came down underneath the 5-minute, and every time it tried to push back into this zone here, into the ORB, it had a hard time doing it. That would give you a good setup for a short trade, risking obviously the high of day or the top 5-minute candle of the day. So this would be a good example here of a rejection at the ORB in order to take a short position. So it would be the same ORB that you're using for the possible trade long or short. It would be the same setup that you're going to use for the short on this trade, and obviously UAL would have given you a nice short to the downside. Let's do CSX. 5-minute opening range candle on this one. Here's the top, here's the bottom. All you do is you wait for 5 minutes of trading. That's it. 5 minutes of trading without doing anything, and it would have given you this candle to work with. So all you have at the open is at 9:40 you're looking for a trade to take. So 9:35 is when the candle is going to close, and 9:40 is where you seriously get a little bit interested in taking a trade. So on a chart like this, top and bottom, chart starts pulling through the bottom, you get a rejection at the opening range as it tried to reclaim it. That's your short position on CSX, and here's your short. Let's see if we get another one on Shopify. SHOP, you have a top candle and a bottom candle. 5-minute opening range there. 5-minute opening range bottom. Chart tries to push through the top, never closes a candle, so you don't take the trade on the long side. Chart starts to pull down. Candle close under the opening range. Opens under the opening range. It's good enough to test for a short. Chart pushes back up, gets rejected at the opening range. Here's a signal for the short trade on Shopify, and obviously it turned out to be a nice short. And let's do one more. Let's see, FAST, FAST, opening range candle. Chart never even attempted to go to the upside, so you have no reason to be looking at this chart for a long trade. Once it starts pulling to the bottom, you're looking at this for a short. So all you have to do is wait for the setup and wait for the opportunity to take the short on the trade on the short. What a lot of people do on this strategy, though, that ends up being a failure for the strategy, and they blame it on the strategy because the opening range failed, is because they don't like to, as soon as the chart pulls under the opening range, to take it on the short side. And so they don't like to wait for that candle to close underneath. They don't want to see if it's a fake break or if it's a real break to the downside or the upside, and they get tripped up on the chart because it really didn't either close upside or close downside the opening range, and so they basically try to jump the gun a bit on the strategy. The strategy is pretty simple as far as the opening ranges. You wait for the first 5 minutes to open or close. You set your parameters on the chart, top and bottom lines. You just line them out, so it's pretty simple to see. And once you get a break to the upside, you wait for a candle to close over it and you take it on the long side. If the candle breaks to the downside and you wait for it to close, and you see the chart still continuing to move to the direction that you want, you take it on the short side. It's a pretty really simple strategy to use. It just takes a little bit of your time. so that you don't trade the exact minute that the market's open. The exact minute that the market's open, sometimes your charts can flop in and out so quickly that you can get quickly long bias or short bias on a particular chart. Now, how can you pick a direction for a trade within that first 1 minute of the trading day? It's not really fair sometimes to pick a direction. Sometimes you'll see a chart make a quick pop and then it'll fail on you. For example, this same chart that we're on. Let's take a look at yesterday's move. Yesterday chart had a nice aggressive push to the upside, and here's the high from yesterday. So what happens here at the high from yesterday? What if you were looking for a long based on the fact that yesterday's highs was at 43.51, so you had an alert set for a break over 43.51 to take the chart on the long side. Chart breaks over $43.51, so you're saying, okay, we broke over yesterday's highs. But without the candle closing, it was just a fake break. A lot of people would have gone long in a situation like that if you're using smaller time frames, or if you're just using a new high of day or break over yesterday's highs as a strategy. You could have gone long into this trade and have it just completely wash on you. And then what would you be looking for recovery on this trade? Well, you'd probably try to justify the fact that we're getting the push to the upside. So then you quickly jump over and you try to fib yesterday's move from the top to the bottom. And you go, okay, well, this got to be an area here where the chart's going to hold for support. So the chart comes down to that area, you add into the trade, trying to average down into the trade now because you're already red, you bought it up here. And so you try to average into the trade and the chart starts bumping, you feel really good about it. And then the chart starts pulling again. This is where you end up in a lot of trouble as a trader. See, the simplicity of yesterday's highs being broken to the upside, but just waiting for the candle to close over that area would have given you a better, surer setup than just taking the break over yesterday's highs. A lot of trigger alerts, a lot of alert rooms would give you a long over that area, but I tend to kind of wait for that candle to close first and make sure that I'm getting the buyers or sellers. If I'm short, make sure I'm getting the buyers in this case to want to keep the price above yesterday's highs. So a person that did this break over yesterday's high strategy would have ended up in a lot of problems on a chart like this, and an add into this area trying to average down, and then the chart would not have recovered and it would have been a decent loss on the day. And so on a trade like this, you want to be careful with using the strategy, whichever one that you pick. The opening range is just one of the strategies that I'm going to go over. Just using the strategy the way that you should use it, which means that you want to at least have the candles close. So ideally speaking, it's not just the first 5 minutes that you really need to wait, because it would be probably the 10-minute. What if there's a whole bunch of other candles in between? What if the chart just keeps doing this for a while? So there we go, 20 minutes worth of time already. And then you get a candle that pushes through here, closes up at the top here. So what you do is, this is 25 minutes already. You haven't taken a trade yet. It's 9:55. The next candle opens above here, and that's where you take your position. So your first position is at 10 o'clock in the morning. And so sometimes just waiting on the charts can really, help you out a lot, instead of trying to jump the gun on too many trades right at the open. A lot of people would like to take trades right at the open, and so do I. I do take trades right at the open, but this is not the only strategy that I apply. So that's the opening range breakout strategy. And next simple strategy, flags. I mean, everybody knows what a flag is, right? If a chart pushes to the upside and then you get a pullback on it, it forms a trend line or a wedge as the price decreases here, and we have some sellers coming in. And when the price does start holding a base and start making a higher low, this is your flag, right? Flag pull, and this is your actual flag. So when the chart breaks to the upside, that's a bull flag to the upside. So now let's just try to locate some simple flag trades during the day. XCO is a nice mover today, so let's look at this one for a bull flag. Obviously you can see in this one that the chart had a big move to the upside, You can see how open and range breakout on this one could have been a really interesting trade for those of you guys that are not with me. This alert for me was at $1.65 on the long. That's when I first alerted this trade for a long, and those that were in it actually got caught into the halt because the chart was still moving to the upside. So it was a really early trade. But either way, this chart, when you have a chart that's pushing to the upside, you're looking for a bull flag to form. So you want to look for charts that are maybe moving to the upside. So you're not chasing them or anything. What you're looking for is a pullback on the chart, a reason to get into the trade on the long side. Why are you looking long? Well, you're only looking long into the strong charts because it's already up. You're not looking to do anything else other than to follow the trend that it's working with already. It's already a long position. So what you're looking here for, you bring up the chart, you missed the first move, the chart halted, unhalted, opened out, started selling off. Okay, fine. What you're looking for is the simplicity of the trade. And this flag setup really couldn't be any simpler than that. So the chart pushed, halted, unhalted, started selling off. We found ourselves a nice little rising higher low situation going on here, and the simplicity of this chart would just be the flag break to the upside. So the flag breaks at this point here, and at this point here you tend to want to take the position right away. Again, I like to wait for a candle to close to confirm that the trend is actually breaking out to the upside, and so I'd wait for this candle to close. As another one opens above the trend, that's why I would take the long position on XCO. Now if you missed a small flag, you can obviously see that the entire chart has an insane amount of flags as the chart continues to really relatively make a higher low. The pennants just get bigger and bigger as the day stretches out. So you can play a small flag to get an entry and a bigger flag to get a bigger add into the same trade that you're playing with. So basically, if you took it long here at $2.11 and the chart's working for you and the chart starts coming back and you've seen a chart, a formation setting up, what you're looking for is for the flag to break to the upside again to get you an add on the trade for a bigger move. But even if you didn't catch this move here and you saw the flag setting up here, all you have to do is sit back and wait. That's all you really have to do. You see a chart that's moving to the upside, you see a strong trade that's moving to the upside, and you miss the entire move, you miss that entire initial move on the trade, don't worry about it. Come back to it. You know that, like, you see charts that are moving up strong. You see HTZ is moving up strong, right? Look at the opening range opening range breakout on this one would have given you one hell of a trade to the long side. But forget that, we're talking about flags. Say you missed the entire move to the upside. You know that this chart's being very strong to the upside. You have a lot of flags here that you can play. Here's the first breakout on a flag. Flag break to the upside and you're long. Here's another one. Flag break to the upside and you're long. So what you're doing is you're looking for strong charts with volume, with momentum to take them on the long side. Now you can't buy long into anywhere in the chart just because it's going up. You have to have a technical reason for taking the chart. So here's flags, bull flags. Let's see if we find some other strong ones. We know that crude oil was strong, so let's look at Will. Nice strong chart to the upside, and again, the simplicity of flags. Here's your flag break to the upside. There are tons of them in between the chart. You can see that there are quite a bit of them. So all you have to do is take the flag break to the upside trade. Once you take a flag break trade where you ideally want to put your stops, okay, let's delete this one here so I can show. So your flag break to the upside is here. So ideally you cannot have the chart break back the last pivot point, because then it's gonna give you a reaction that's obviously gonna be to the downside. So ideally what you're playing for in a strong chart is you're playing for the move to the upside, right? You're playing for the chart to break higher, not lower. You're using this current momentum here to get you a chart that makes a higher move. In order for the chart to make a higher move, it can't break the last pivot point. So what you do on a flag break is you take a position. Now is it going to be a huge position? Of course not. It's going to be a efficient size because you're using a technical analysis reason, a criteria, a bull flag in this case, for a trade to the long side. So what you do is you take a efficient size position. That way you can manage the risk down to here. The reason why your risk has to be here is because if the chart breaks to the downside, it's going to end up pulling even further, and then it has to find support, probably come down to here, probably come down to here. But why play those games when you have a defined area here for risk? So what you do is you take the starter position on the trade. Next candle that opens above, you take the candle that opens above for the entry on the position. And where do you look for an add? Well, if the chart breaks over this pivot to the upside, just as you're using this pivot to the downside for a reason to exit the trade, it's going to be the same theory. If the chart breaks the pivot to the upside, you can do an add on the trade. So efficient size here for your entry, and add over this candlestick here. Stops are down here. Once you get the candlestick to break to the upside, you've put your add in on the trade. Now the chart should no longer be coming down under this range. This range here, being that the chart broke over the high of the day, this range here becomes your support area. So now you have an entry here, you had your stop here, you have an add. So now that you've added into the trade respectably, so the chart should not come back into the flag at all. It should not come back inside of the flag. Sometimes they do, and that's where, that's where proper position sizing is really going to help you out. If this was a huge range, or if you're positioning your chart with too much size right away, well, yeah, an add here comes back in here and stops you out, can hurt you. But if you're positioning your trade properly, because you still shouldn't have a huge size even though it broke over to the highs. Sometimes I'll play an entire trade with just my efficient size because I just didn't feel safe enough to add into the chart. Not every chart, because it's moving in the direction that you want it to move, not every single chart gives you a perfect area for an add. Sometimes I just don't feel comfortable with an add, even if it's breaking over the highs, even if I feel like I need to add into the chart to make more money. I just don't do it because I don't feel comfortable with either the L2, the volume, the sector, or the way that the general market is moving. I just don't feel comfortable with it, and sometimes I won't add into a trade if I don't feel comfortable, even if the chart's moving aggressively. In a situation like this one, same thing. Even when you take a position here, you're not going to go, and go crazy size because the chart broke over to the upside. You're still going to manage the risk because you still have to understand where your stops need to be. So entry, add, stops back inside of the flag, and you play it to the upside. If you continue to see the formations that's working, there are certain points where you can then do an add on it, but you have to respect the trend that it holds as it works. Now that you have a position in the trade, there's an obvious line here that you would need to respect, and you can play the chart all the way up as long as it stays above that uptrend. When it breaks the uptrend to the downside, this is where you're going to have to exit the trade on a chart like this. Now this entire move may not be worth a lot of money, right? It may not be a huge move or anything, but this is just an example of a type of bull flag breakout and how you would position yourself in that trade. Energy, let's go to NRG. We're still on flags here, right? So we're looking for bull flags. On a chart like this, you can probably feel like there isn't a lot of areas that you can play as far as a bull flag go. But if you can break it down a little bit, you can see some of the flags inside of the trade. You bring the candles closer and you can see some of the bull flags in the trade. There's one here to the upside, maybe a little bit harder to play. You may feel like that's not really a kind of a flag that you want to play on a trade like this. I would do something like this. I'd do a flat top breakout, which means that a break over this candle would put me into a long scenario. It's still a flag, but it's just going to be a flat flag. It's going to be like a parallel flag, but it's still a flag, right? You still have the pennant area, and you still really have the pole on the chart. So you still have a flag here. It's just not a wedge flag, and that's the only difference. So this flag here is just like a parallel flag. There's really, it's really still a flag formation. It's just not a wedged flag. I prefer using wedged flags, honestly, but not every trade, does what you want it to do, right? The trades kind of do sometimes what they want to do, and in this case here, you would have a flat top breakout to use as a flag in a possible long trade. It would still give you a nice upside move on NRG. I'm gonna have to run through some of these flags a little quicker, but I do want to bring up some more flag trade setups. PX had a really nice trade today. Strong move to the upside. So what do? You just sit back and you wait. You say, oh, well, okay, this chart picked up. I'm going to just watch it to see if the chart can give me an upside move. So you sit there and you watch it. You see the chart pulling back. You know where your opening range is, right, from here to here. So understanding where the opening range is, you're thinking, well, if the chart pushes over the opening range, where is it that you're looking for support on the chart? Chart came back to the top of the opening range and held support. So now you're looking at the chart for an upside move. What you do is the simplicity of the trade. Here's your flag. Flag breaks to the upside. The chart pushed over. I don't like that. I want my candle to close above, so I wait. Candle pushed over, nothing. Candle pushed over. I kind of like it a little bit more here. So in between these areas here, I'll be taking it on the long side. And obviously this flag to the upside provided quite a nice trade on PX long. And let's do AEZS. Strong chart this morning. So when you get a strong chart, you're looking for a flag to play. This chart provided ample opportunities for flag breakouts all the way through, and it could have given you an opportunity on any one of these flag breaks to the upside. So you look for something with momentum. You're looking for a chart, if you're long biased, that already has momentum. You're not trying to look for a chart that's on the downside to try to pick up a flag trade. A downside trade is a bear flag. So let's look into some of those charts. Bear flag is basically when a chart's momentum is already to the downside, you're looking for a short to pop into, to short into. A short pop to short into. So what you're looking for in a chart that's to the downside, you can see how this chart unfold. This is a 2-day chart. You can see how the simple flag to the upside on this would have given you upside moves on the chart, right? You're seeing tons of flags on this fold trade that would have given you a long. Same exact mirrored effect to the downside, where a bear flag, a break to the downside, would give you a short position. And it works the same way. If a chart's momentum is already to the downside, you're not always looking for a perfect reversal to the upside. Sometimes you just want to look for the continued sell-off on it, and this would be a short setup as the bear flag came into formation here on fold. Let's look at a couple other charts that were down today, like Weight Watchers, for example, would give you a good example here of a nice bear flag. Couple places on the chart that I can see instantly is, here's your chart pushing back to the upside. Here's your wedge, simple wedge. Chart breaks the wedge to the upside, then you got yourself a reversal, but the chart breaks to the downside and you have yourself a bear flag. So that's your bear flag on WTW. Let's take a look at Coop. I know it had a down day today. C-O-U-P. Okay. So I'm not using any indicators here, right? So we're just doing the flags. We're just doing the candlesticks, the direction. You're looking at this chart in general. You can see that we're in a downtrend. So you're looking for an uptrend here to short into. So once you get the uptrend here and the chart breaks to the downside, well, there you go. You got a short setup on a bear flag. Let's take a look at a couple more. And I know that SQ had a downside move today. So okay, so example here, strong aggressive moves to the downside. So what you're looking for is you're looking for the chart to give you a reason to take it short. Once it breaks the flag to the downside, you have a bear flag. And there you go on the flag setups. Now these moves, not all of them are giving you the same type of ranges, but I'm sure that we can find charts that would give you some big ranges. And you know, it's really up to the trades, or how you position yourself, or what you're looking to obtain off your charts. On this one, hog yesterday, look at it, bull flag here, right? Breakout here. So on this one here, you can see that there's an obvious reversal. So once your chart is reversing, if you use an opening range break right here and right here, may not even have been quite a move at all. Like, even if you waited for the chart to come back over the opening range on hog and take it on the long side, didn't give you much. If you took the opening range short, didn't give you anything. So both ways on this chart, this entire chart, would have messed you up, which is why I want to make it for the last one for this reference. Sometimes the formations will not work for you, but that doesn't mean that you stop using them. Simple things like a flag on this chart would have chopped you up. Flags, bull flags here, bear flags here would have chopped you up. Opening range would have chopped you up. And so it doesn't mean that your strategies are not working, it just means that the charts are not ready to play the way that you want them to. Fish in size on all of these trades are going to help you to not get yourself hurt. It won't. It would help you to keep out of getting into trouble with too much size on your trades, and it will allow you to adjust yourself to take another position if this one isn't working for you. So it's always a good thing to be using fish in size when you're taking a trade. Never going full size on any trade at any time unless you know for sure that it's going up or down. The only time that you take a position that's big size on a trade is when you're already fished and you're already in the direction that you want it to be in. Otherwise, if you're still trying to pick a direction but you're positioning your trade with huge size, you're basically saying, hey, I know for sure what's going to happen. And the day you figure out that you know for sure where charts are going to go, then you know you don't need to be in webinars anymore. I think you can do your own thing. But nobody, no trade setups, no formations are ever going to be guaranteed. So if the trade formations or setups are never going to be guaranteed, then why should you ever go full size into your trades when you start that position? Always do starter size, what I call fishing size, so that you don't get yourself into too much trouble. The third simple strategy that I'm going to go about are called timed trades. So about 10 or 10:30 in the morning time, you find a lot of reversal areas. If you've noticed on a lot of charts, I can probably bring up a few. Let's do Pixie. I haven't seen this chart. Okay. Good example here on today's chart would be an example for a time trade reversal. So between 10 and 10:30, I usually about 10:30 look for reversal trades. On charts that are aggressively down or up, I look for reversals on them. A chart like this one, you can see that right at the 10:30 time. I think this candle here is 10:30. So 10:30 time you get a reversal trade. Is it a huge one? No, but it's a good example of a reversal trade and how charts can react at that 10:30 time of the day. There are other charts though that will give you bigger reaction time. Here's your 10:30 time on Momo, would have given you a huge move to the upside. And look at the opening range on Momo, how it acted as a resistance on this chart and would have given you an opportunity for a short trade back onto the downside. But we're doing time trade reversals. So look at Momo on that time trade reversal area. Let's take a look at yard time trade reversal. So here's your 10:45, 10:30 area on the trade. So you took the trade because you're looking for a time trade reversal. The chart really just kind of hovered around here, didn't cause you any damage at all. And then it started to work. But the initial position was taken because of the time trade reversal. Let's look at 6SIX time trade reversal. Look at this one. right? So this candle right here is 1030. And so between 10 and 1030 you're looking for reversal. So I'm looking basically for a long on this chart because the chart's being to the downside. So I'm looking for a long position on it. I'm looking for the chart to have a reaction at between the 10 and 1030 time. So usually I'm trying to look at the chart during this time of the day to see if I can get some sort of a reaction from it. So a nice downside on 6, and then right at the reversal time the chart has a big move to the upside. Let's try to get another one. Miners usually give a really nice 1030 reversal time, and this candle here is exactly at 1030. And look at the reversal here on this trade. Since I'm on Nugget, I might as well bring up JDST, which would have given you an exact time trade reversal also for a short position, being that the chart was aggressively going to the upside. So you'd be looking for the opposite trade on something like that. Time trade reversal, look at FDX after the chart had the monster pull back to the downside. It's 1030 and you said, hey, I may want to take a long trade on FDX here using the time trade reversal strategy, and then you get a nice move to the upside off of it. EA Sport also had a nice move to the upside. Time trade reversal again would have given you a really nice long opportunity on this trade. Now let's look at some time trades that may have been shortable. MDSO had a move to the downside today. 10, 1015, 1020, 1030. Charts popped back to the upside. Time trade reversal giving you a nice short opportunity on this one. And I just brought up JDST, which would have given you a good short opportunity on a time trade reversal. Now the thing is that, do all charts work the same way? Do they all have the time trade reversals? Not all of them. You can have a lot of charts that don't do anything at the time trades. You can have a lot of charts that give you the thought that you would have a reversal on it, and then they fail on you. So it's just like any other strategy out there. It really depends on how much you're looking to get out of it and how much the chart is willing to give you. Not every formation, not every strategy is going to give you points to the upside or downside. So it's not always about how much money can I make on it. It's really about what strategy can I use that can better my trading. That's something that I can say like, hey, this is the strategy that I want to use day in and day out in order to have consistency in my trading. And so time trade reversal is another really good strategy to use. My strategy is the 813 moving average strategy. So a moving average is just it's basically a trend line, right? So let's put a couple moving averages in and I'll show you my strategy, right? I'm pretty sure everybody knows my strategy at this point, but it is my strategy and I am going through a couple simple strategies, so let's just do it. 8 EMA, A13 crossover strategy. So we'll make the 8 the black, and then we're gonna make the 13 EMA red. Okay, 813 EMA strategy. The simplicity of this strategy is when one crosses the other, you take the trade on the long or the short side. So let's go over a couple of charts that may have had simple crossovers that would have given you an insane trade. We're not using anything else here other than the strategy. We're not using indicators, no volume, no MACD, stochastics, RSIs, anything like that. No VWAPs, no what type of chart is it, what time of the day it is, nothing. We're not using anything else but the 8 and the 13 EMA strategy. The simplicity of this strategy is it's a little too simple sometimes, and people don't want to use it because it's just too stupid to use, and it's the easiest thing that you could use. It's a strategy that I've you know, kind of developed that I like to use, and so A13 strategy. Race. When the chart gives you a crossover to the upside or the downside, you take it on the long or the short position, right? Here's an example here with race, and you can see how the 8 EMA and the 13 EMA once crossed over in this chart, it really never came back down. This is just an example of what would be a perfect trade, but that doesn't happen all the time. Sometimes trades have to develop during the day. X would have given you a beautiful A13 EMA strategy before even the chart started to do anything. Here was the A13 here. As the chart kind of hovered around, it still gave you another A13 crossover strategy here. And so for those of you guys looking at that a little bit closer, there it is with the 8 EMA crossing over the 13 EMA, putting you into a long setup on X. So on X you'd be long at the A13, and you can see that the A13 strategy kept you in the trade all the way, and you probably ended up keeping it if you were into, you know, overnight in charts. So that would be a good example right here of an A13 EMA strategy that turned out to be a monster trade. AKCA would have given you the same strategy. A13 EMA strategy started crossing over here. We're not using anything else. We're not using opening range breakouts. We're not using volume indicators, RSI, stochastics, none of that stuff. Just the simplicity of the strategy itself, which is if my 8 EMA moves over my 13 EMA, I'm going to take it on the long side. That's the A13 EMA there. CTXS, A13 EMA strategy crossed over here. Chart never crossed back down during the day. CTXS. CMG had a really nice 813 intraday trade. Chart pulling to the downside. 813 crosses over and you take it on the long side all the way up to this area here. HTZ. 813 EMA strategy crosses over here. Once you get the strategies to cross over, all you do is you ride the thing for the entire duration as long as it wants you to keep in it. How many times in the trade would you have been forced to get out of the trade? None. If you're using the strategy that kept you into the trade to begin with. If you're using a strategy to get you into a trade, use the same strategy to get you out of the trade. An A13 cross up would mean I'm long. An A13 cross down would mean if I'm long, I have to be out. Do I have to be short? No. But I at least have to be out. So you'd stay in the A13 crossover all the way, and you'd probably still be holding the trade if you're into overnight trades. Nice example there, Chris. TTD was a beautiful trade setup, brought up this morning very early in chat. But A13 crossover to the upside, and you never saw it again. And if you had to, you would have to sell here on this chart where the chart crossed back to the downside. You're looking for stronger charts to be long, and you're looking for weaker charts to be short, right? Lululemon, A13 crossover happened pre-market on this one, and the chart never, ever came back down. Now this is why I like to look for A13s. I usually try to trade with a 2-day outlook on the chart so that I can see all of these things happening. I can see where the chart's breaking over yesterday's highs for any reason for an add into a trade. But if you're using the A13 crossover strategy, you would see that it really kind of stretched out since yesterday, and the chart continued that strategy all the way through today on Lululemon. Let's take a look at SM. Another great example of an 813 crossover strategy that never saw a cross back to the downside, and even if you had to sell, that may have gotten you out over here at the end. Energy name like Ren, 813 crossover strategy real quick at the open. For these I like to kind of collaborate it with something else, which would be like an 813. Make sure that it crosses over at least the opening range breakout, and then I can take this trade on the long side. This was also brought up today for a long trade, REN. So you can see that the A13 crossover would give you quite a bit of quite a bit of charts to play on the long side. If you're long biased, you can wait for the charts to cross over and then you take them on the long side. Now if you're looking on the short side, the strategy works the exact same way. If you miss a long trade, you have nothing to worry about. Just wait for the short side if you can't find the trade or find a reason to be long on it. A13 cross down would give you an opportunity to trade the chart on the short side even if you'd missed a long trade. So if you're looking, sometimes you're looking at those bear flags and you can't figure out where the flags are, you can use the strategy like this to really get you into a nice trade. ATHM was a good example today of a nice 813 cross down that gave one hell of a trade. Even at this point here, chart cross down again, giving you a really nice trade. This trade gives you a whole bunch of reasons here to be short if you were looking at this chart to trade. Here's your opening range breakout. That would give you first reason to take the trade on the short side, right? The A13 cross down would give you another reason to take the trade on the short side. And this complete bear flag here, this break to the downside, would give you another reason to take the trade on the short side. So basically you would have quite a bit of reasons here to be taking this trade on the short side if you were looking at it to trade during the day. Bear flags, bear 813s. Look at this one. 813 cross down on PTI would give you a perfect short into the day, and then you try to figure out, well, why would I want to be covering the trade if the chart just doesn't want to go back to the upside? Remember that the moving averages average 8 days and 13 days of the trade and data. So if the chart starts to move back up enough to get you out of the trade, the moving averages will show that to you. They will cross back over to the upside. And so you need to understand that when you're using the strategy, allow the strategy to work for you. Let them tell you where it's time to exit the trade. Let the strategy keep you in the trade long enough to see if it can work or not. Sometimes when you're playing into a strong chart or a weak chart, you'll get a lot of stuff like this. You'll get the strategy that moves in and out constantly throughout the trade. Becomes a slightly difficult trade to work with sometimes, and it's just called choppiness, right? So on a chart like this that chops in and out, well, how do you define which charts work better with the strategy? For me, I tend to look for trending charts. I tend to look for bigger moving charts to use that strategy for, especially like say crude oil is being aggressively bullish. I'm trying to use that strategy on a crude related trade. I'm trying to use that strategy on, like, if gosh, I have a lot of stuff to delete now. If I'm trying to use that strategy, if I'm trying to use that strategy on say like this chart on will, I'd be long here. A13 crossover never really gave me a reason to sell it, right? If I'm looking at a crude trade, A13 strategy never gave me a reason to do anything else. Now nothing else is influencing my trade here. Absolutely nothing else. I'm not concerned about what's the market doing. I'm not concerned about what sector is up or down. I'm just concerned about where are my moving averages on the chart and how can I use them to formulate a trade. A13 cross down on shop would give you a short on the trade. DWT and UWT, you can see that pre-market here you had a quick little bear flag set up, and then an A13 cross down would giving you a short opportunity on the chart. UWT would have given you a bull A13 to the upside and a long opportunity into the chart. Now when you're in a trade already on this strategy and it's already working for you, what you have to kind of do sometimes is to try to put the trades on a bigger time frame. Once I'm in a chart like this and it's already working for me in the direction that I want it to work, I change over to a 15-minute time frame. So say like I'm in this, like let me just get a better chart because you know this one's a little bit up and down a little bit. Um, let's do TTD, because this one I know that the A13 crossed back on the 5. Okay, so the chart crossed back on the 5 minute here, right? On the TTD. On a 5 minute time frame, I would be long on the trade. And then I would have probably exited on the trade here if I was using the 5 minute. But once I'm in a trade, say I'm in the crossover, say I'm in the trade on the long side, if I'm in the trade long enough and there's enough time spent on the day, I can then switch it over to a bigger time frame, so that way I can really kind of stay into the move as long as I could. On a chart like this, TTD, I wouldn't have a reason to sell the chart. My reasoning for selling this chart would probably only come into play if I needed to exit the trade for the day, being that it was a day trade position. If I needed to stay into the trade longer, the moving average would keep me into this trade long enough for me to play it into the next day, which sometimes is a good follow-up trade. So let's take an example of an A13 that maybe would have given you a suggestion to keep it longer. Let's do AAOI. Now, when I'm using the strategy on a whole, sometimes it tends to want to keep me into the trade longer. So if you look at this chart, for example, you can see the red and the black lines. I know that it's kind of probably really small for you there to see, so obviously you're probably gonna have to look at these a little closer on your own platforms. But the 813s on this chart, for example, is a monster. It's a monster trade on this chart especially. I love using it on this chart, and I don't hesitate to take it on this chart when I see it. Today's idea on AAOI was completely different, and I felt like today that the chart was going to start topping off, and it really did. It had a lot of hesitation on the chart, still had ample moves on it though. One thing with the strategy, like any other strategy out there, and we can go over any other charts, the 813 will never be guaranteed, just like any other strategy. But if you can use it for what it is. Now, if you're looking for smaller moves on charts, maybe the time frame that you're using could be adjusted so that you can see the usefulness of this 813 strategy. Say you're just into smaller moves. Say you just want to play something for a quicker move. You can go with a 1 minute time frame if you want. It's not really my type of thing, but you can go for moves like this with a 1 minute time frame. You can use the 813 strategy throughout the day to formulate trades. You can do a quick, hey, I want to be long into the open off the 813 crossover on Momo. I want to be short here on Momo, right? I want to be long here on Momo. Now this long trade would have gotten you what you wanted out of it. You would have gotten the pop out of the open. This short here would have given you one hell of a nice short, and you would have been totally contented with this move. The long here would have actually put you all the way through this area, because there's no way that you should be selling this anyways. And the long on even on the 1 minute time frame on this chart would have brought you all the way up to here until it actually had a real 813 cross down. So even on a smaller time frame, you can see that if you're an in and out trader for the day, you can see that you can structure this simple strategy to really capitalize on some gains if you're a quicker in and out type of a trader. Now if you're not a quicker in and out type of a trader, you don't have to worry about stuff like this, and you don't have to you don't have to use the smaller time frame to catch moves. You can use a bigger time frame to catch a bigger move. So maybe you still took it on the long side, or maybe you didn't at all and you didn't play this at all. But you see where the short would have gotten you on a 1 minute time frame would have gotten you a quicker reaction than the 5 minute time frame. And the long would have given you a lot quicker reaction also than the 5 minute. So what you could do if you're looking for quicker moves is you can always reduce the time frame that you're using to get a quicker entry on the trade. The only problem is that when you do that, you also put yourself into quite a bit of possibilities to get chopped up. On this chart, it would have worked out to perfection, where you would have gotten that long into the open, the short right here and the long right here. You would have been fine on a chart like that. But on other trades, it probably could have chopped you up quite a bit. Let's take a look at ACIA. One hell of a move today, and look at the simplicity of the strategy that would have gotten you into the trade. Simplicity of an A13 crossover would have gotten you into this trade. Now, I only use 5-minute time frames. This chart was also brought up for a long trade today, early on, after the opening range breakout. And on this chart, the simplicity of the strategy would have gotten you into one hell of a trade. Sometimes when you miss the crossover, say it happened pre-market, as like in this one, for example, with ACIA, you still want to apply the A13 to it. You just have to understand that you have to use a secondary criteria now to back up that strategy. So you know that it's an A13 crossover. It would only be an A13 crossover if the charts move into the upside. You have to think about this realistically. If there's an 8 over the 13, then the prices move into the upside. Otherwise, the 13 would be on top of the 8. So the prices move into the upside. Knowing that the prices move into the upside on it, because fine, we didn't get the crossover, but you know, being that the two moving averages are here, you know for a fact that it's an upside move. So you look for a secondary reason to take the trade on the long side. Knowing where the congestion area is and using another strategy that we brought up earlier, the ORB, you can quickly get yourself into a long trade on a chart like this on ACIA. You know you want to be long because of the 813, and you use now the ORB to get you into a long position on a chart like this. So now you've used two strategies in one trade to try to make something happen. And the same chart would have given you a lot of other types of strategies in the same thing to play the chart to the upside all day. So your A13, your opening range break, your flag breakouts to the upside, all of these are reasons here for you to be taking charts like this on the long side. On this one, for example, if you took the flag break to the upside, it also coincides perfectly with another 813 crossover. So you can use these crossovers at any point during the day to try to get yourself into a trade. Sometimes, and I've done it myself, where I'll fight my own strategy to try to get a trade. Sometimes I'll feel like, no, this just cannot work, and then it proves me wrong. The strategy is very, very, very successful if you use it robotically. Now, I still don't have anything else on the chart. I don't have any moving averages other than these for right now. I don't have any indicators. I don't have anything else that would keep me away from playing with the chart this way. So pick a strategy. Those are the four that I'm going to go over tonight. ORB, flags, bullish and bearish, time trade reversals at that 10:30 time for a short and for a long, and also the 813 crossover strategy. How do you know when you're staying in overnight? Well, the thing is that the strategy should allow to tell you that. How do you know is if you're in there long enough. First of all, you have to have some sort of a buffer zone in order to be there long, right? First of all, you have to have a trade that has buffer. So you have to be, say you want to overnight a trade like ACIA chart closed at $42.49. Okay, so in a trade like this, if I had to overnight it, I gotta be at least 75 cents to a dollar over where the price is. Well, sorry, under at this point. So I know that, if I was in it for the long haul here, and it coming right into close somewhere, somewhere into this time frame here, I'm looking at the chart, we're at $42.30. I gotta at least, my entry gotta be at least somewhere down here. That way that I can facilitate, if the chart was to pull back or something in the morning, that I can still be in the trade. Now, if you took this chart to the upside because of the strategy and you're in the chart still, you should, at that point, if you're looking at this chart at the end of the day and you're still in this trade and you're still on the 5-minute time frame, then you're using it wrong. Switch it to the 15-minute time frame and you'll see, clean as day, no reason to sell here, right? and so the A13 crossover strategy would keep you in on a bigger time frame for a continued move to the upside. At this point, you would keep the chart. When you're overnighting stuff, though, a lot of people like to overnight the entire thing, and that's risky. You never know what can happen overnight. While you're asleep, something can happen that totally adjusts every single chart and every single market out there. So you never want to overnight your full position. What you want to do is you want to say, today was a good day, that strategy worked, I need to keep some of it. Well, that's the thing. You always use smaller time frames to enter a trade. To enter a trade, you start small and you open up the strategies. You open up the time frame. You never go from a 15-minute time frame and then switch it back to the 5-minute to trade it. You go from a 5-minute time frame to a 15-minute time frame to trade it. So you can start off really small if you want to really catch a defined trade. Sometimes you can do it like this. I never use the 1 minute really, honestly, unless I have to, like if I'm using an IPO or something that's parabolic or something that's falling knife or something. That's the only time I really want to put up a 1 minute time frame. But for the sake of argument, you can use a 2-minute time frame. So let's work this out in a 2-minute time frame. On ACIA, for example, okay, fine. Let's get out of this one. Let's use AKCA. Okay, 2-minute time frame on AKCA. You've been having this thing up on a side chart all day long. You're trying to figure out where to get into it. Here's your 2-minute time frame on AKCA. Chart starts moving up. You're a 2-minute time trader, right? So you're in at 10:05 here. Chart's up at 10:35. You selling some. You made your 25 cents. You're a happy camper. You're still in the trade because you only sold some of the trade. Switch it over to a 5-minute and you realize that, hey, the chart still looks like it wants to go, right? There's no reason to sell even on a 5-minute time frame. By the time the end of the day, you're still in this trade. You have no reason to sell the chart. But why did you get into the trade? Well, you were using a smaller time frame to get into it and using a bigger time frame to get out of it. No reason, absolutely none at this point, to get rid of all of the trade. But you made your money here, right? Because you're using a smaller time frame to enter, which was at least a 2-minute time frame to start the trade. Now, you can have a lot of trades like this. Look at ACIA. Look at, AAOI. And if you're a smaller time frame trader with this strategy, if you're all about, let's do ins and outs, you can make a ton of money in and out all day long on one chart. Pick a chart, any chart. I would prefer a chart with range, non-ETF based, and really kind of like this one, where it really doesn't have a lot to do with a gold or a commodity based or anything, right? Well, yeah, if you want to in and out of Amazon all day, but I don't know if you're buying 1,000 share pieces for 10-cent moves. I would doubt that that's the kind of chart that you want to scalp throughout the day. But a chart like AAOI here would be a prime example of a smaller time frame trade that you can scalp in and out of the day using this time frame. Now, this would allot to quite a bit of a lot of tickets at the end of the day. But if that's the type of trader that you are, a chart like this will allow for you to have ample opportunities to take a long, to take a short, to take a long. Each one of these crosses have paid you. This one paid you nothing. Nothing. But then you came back in. Long. Long. Continued long from here. And then the short right into close. I mean, this one trade here would have given you about 10 different setups. Maybe you had, what, these two that failed. You took it on the short side, it failed. You took it on the long side, it failed. Out of all of these setups, 1, 2, 3, 4, 5, 6, 7, 8, and 9. Out of 9 setups, 2 of them failed, and this was the only amount that was really lost here. So out of 9 crossovers, 1, 2, 3, 4, 5, 6, 7, 8, and 9. 9 setups with the same strategy, and 2 of them failed over here. So the odds on this strategy can really pay off. Depends on what type of time frame you use. And for me, I don't really use time frames like that, and I don't trade like that during the day. So I don't really care for that sort of stuff. So I use 5-minute time frames as my start and entry into any trade. I won't maybe catch all of the moves. I won't take every crossover either. I'll look at directional stuff. AAOI for me today was never, yeah, you of course you get chewed up on some of that. You can be long short long short long short all day long, but for me, I like bigger time frames because I like to trade charts for the entire day. I like to get bigger moves. I try to get things that can give me bigger upside potential, like when I did XCO today, for example. I really just I got out of the trade only because I had to, but 813 crossover just gets me in the trade long enough to make it work. You know, you have to be wicked quick when you're doing stuff like that, and use hotkeys as a quick you know, in and out of trades. That would be an ideal helpful thing that would help you to be in and out of trades quicker. I don't use hotkeys because I don't trade like that. It's never been something that I care about trading like that. Look at HTZ, for example. If you use the 5-minute time frame, I would be in here, right? Let's use the 1-minute time frame and you'll see. How much money would you have left on this trade using a smaller time frame? How much money would you have left? Trading versus scalping. How happy would you have been? Because when you're scalping, you're doing size, right? How happy would you have been getting into this trade at 606 and selling at 630? 1,000 shares, yay, 30 cents, I made $300. How happy am I getting into the same trade, same 1,000 shares, with 150, opening range breakout, add my rest, there you go. So I have 1,000 shares with an average of about, I would say about 1632. Chart came all the way up to 17 something. I'll be a happier camper. You made $300 here on the scalp, and this is over $1,000 trade to the upside. One in, one add, one sell when you're happy with the trade because the chart never gave you a reason to exit. So you know, you can be a trader or a scalper, and using different time frames will allow you to really prove to yourself what do you make out of yours. Look at that. Could you get a prettier chart than that? I mean, that's beautiful right there. That's what the A13 strategy can do for you. That's what your trading should look like. That's ideally what every trade that you take you would like to see happen, right? HTZ, that CNX, there's even that AKCA. You know, there's some beautiful. Look at this race, RACE. You know, so many different types of trades like this. This is ideally what you want to see when you're taking trades, right? So when you try to get now a strategy, now you have the opening range breakout, the flags, the bull flags, the bear flags, the time trade reversals, and the 813 crossover. So those are just for my strategies. The 813 crossover, I use it religiously, but I also use it in accordance with other things that sometimes actually throws off the strength of the strategy. Sometimes my strategy is going to say, hey, take this thing long, and I'll say, nah, that's a double top. And the strategy will prove me wrong at the end of the day. Sometimes I'll see a crude trade move into the upside. Yeah? I'll see a crude trade move into the upside, and I'll say, nah, crude looks heavy. And the freaking chart moves to the upside all day long. And it proves me wrong. I've tested that strategy and back tested it with over 8,000 different charts. Obviously not individually. I've tested it with the program. 85%. So it's a very, very, very reliable strategy, and I suggest that if you're looking for something super simple, I think that you can definitely go with this one. The A13 strategy is pretty simple. Okay, so let me Lewis, you guys can ask any questions at this point. I think I went through four of them, and ask any questions about the strategy, about anything else, and I'll be happy to address it. Lewis, as far as the day trading at ITA, well, I'm up at 6. My computers come on at 6:15. I'm usually the first person in the trading room when I open up. Sometimes there's nobody here. Terry's usually second. Um, I finish my notes on most days, and I would say about 90% of the time. By 7:30, notes are finished and posted in the room. I go over the notes on most days at 8:45. Last couple days I've had a run around with taking my daughter to camp, and so I've been actually late on going over my notes. And for me, late is anything past 9 o'clock. That's late for me. So everybody's prepped up and ready to go before the market opens, and if questions are answered, we go over commodities, we go over what are we seeing on daily charts. I'll go over like SPY and biotech and crude and all of that. We'll go through some of the future charts, making sure that we kind of see what angle we're looking at today. For anybody that was in the room today, and Terry, anybody here that trades with me, we were long biased all day long. Long biased on everything that we were playing. Nothing about the day was a short trade day for us, excepting on AAOI, which I didn't feel like was going to have a downside move today. So during the day, I'll set up quite a bit. Sure. Sure, Terry. During the day, I will go over tons. I can't tell you how many setups I went through today for long trades. X was brought up right at the break point for a long trade today. This isn't my trading chart, or all of my circles would have been on here. Usually when I see a trade setup, I'll do something like this. Well, here's the high of day breakout. There's the high of day breakout. Here's the A13 cross. I'll do a circle just like this, and I'll say if the chart breaks over that range, take it on the long. I'll leave it up for a little bit. I'll walk away. I'm scanning all day long. I scan about 1,500 stocks a day, and I'll bring up any single setup that I see that's viable. XCO I brought up today at $1.65 right here. As soon as it started crossing over, I brought it up for a long trade. There were people that took it on the long and got into the halt, and they made money on the trade because the long side, I bring up tons and tons and tons of different setups during the day. Brought up TTD for a long over $51.25. And I remember this one because this was a monster trade. So basically the chart was, if the trade breaks over this pivot, to take it on the long side, and obviously you can see that it was quite an aggressive long side. So basically during the day I do a lot of, I take my own trades, I'll show my positions, I will tell you what size I'm getting into, how much I want to add. You know, it depends on sometimes the type of trade. If it's a setup trade, I'll say, hey, I'm gonna wait for this XYZ chart. When CSX today, CSX, we were just waiting. The call on CSX was a downside move into the open. I forgot what the notes were exactly with CSX, but a downside move into the open, and we were looking for that $51.90 range. I took it long at $51.95. We all took it long at $51.95, at least those that wanted to trade it, and we actually got a full point on the trade to the upside. I tell you where I want to do my ads. People ask me, hey, where should I add? Should I add now? I'll say no, well, just wait for it. Like on this one, for example, when the question was brought up about where to add, I said, well, the chart needs to at least break over this area of resistance here, then I'll do an add. So it's basically a walkthrough. We talk all day long. I'll take breaks because I do teach all day long. If you think this webinar is informative, then just spend a day with us. It's non-stop talking. I talk till my voice gets sore. But I do take breaks during the day because I really do go over a lot of stuff during the day. And if you think this 1 hour webinar is a lot, then just spend a day with us and you'll see how much stuff we do go over during the day. And it's not just about here's the chart, there's a chart, you know. It's not that kind of stuff. It's about, hey, you know, position yourself, and we do a lot of mental training, and you'll learn that just by the way that I trade, and the kind of trading environment that you would like to find yourself into, being calm and composed when the trades work for you, or when you're up on a trade or when you're down on a trade, you know how to react and how to keep calm, and you know, things like that. But tons of stuff that we go over during the day. It's just a huge amount of stuff that we do, and alerts and trade ideas for the day. I would say on an average day, it's probably about 20. When charts are moving, when the market's strong, it's sometimes even more than that. And I'll go over the day afterwards, and I'll look at how many chart setups that I did bring up, some of them that I didn't take, a lot of them that I didn't take. I can't take every single chart that I see. Today, like for today, I did 6 trades today, and I lost on one. My loss on the trade that didn't work was CSOD. I took it on the long side. I was thinking that, you know, the chart pushes to the upside, gives a pullback, and I'll play it on the long, right? Look how the simplicity of the strategy would have kept me out of the trade on the long side. It would have told me, hey, even if you want to be long, you don't have to be long. Do you have to short it? No, but you shouldn't be long. And I took it on the long side. Strategy proved me wrong there. It's the only trade that I lost on the day, and the strategy told me to stay out of it. I did FSLR, pop and short trade. I did SNI, pop and short trade. I did, obviously, CSOD was my third trade. I did UWT long on this one. I think I got in at 40 something. I can't remember. I did this one on the long side. CSX I did on the long side with the $15.95 entry. And I did XCO on the pullback at $2.01 average on the long side. So out of 6 trades that I did, 5 of them worked, and I mean today's tally was $3,073 in gains. So all in all, it was a nice day, and other than that, there were so many better trades, that setups that were brought up today, like TWLO for a long, and this TWLO isn't actually a long from today, it's actually a long trade from yesterday, and so it was a continuation trade today. But there were quite a bit today. Restoration Hardware was brought up for a long trade. I didn't even see Blue making that kind of a move today. X was brought up. AKS was brought up with X, obviously. TTD was brought up. SNI for the short. I mean, just numerous stuff. All of my trades done live in the room. Yes, sir. Do I stream my portfolio? I don't stream it, but I'll take live snips of my P&L during the day, and I'll put it on the screen so you can see what it looks like. Like this is my current position on XIV. That actually it's the only snip that I have available, because I just delete them after I take them. But this one was taken today, so I could probably still bring it up for you. This is my current live position on XIV long that I'm swinging. So, but during the day, I'll just take a snip of my entire P&L and post it up. The reason why I don't stream it live is because I do not look at my P&L box during the day. So if I had it up there live during the day, that would bother the hell out of me, and I couldn't do that. But I do show all my trades, the position size, everything during the day, and so some of the trades work and some of the trades don't, and when they don't work, I don't blow up my account. I don't take losses that's gonna damage me for tomorrow. And when they win, we celebrate the wins, and when they lose, we understand that that's part of trading. But more so, we have good trading days. Oh, what's my ethnicity? Trinidadian. Anyways, let me stop the recording.